In this video, I'm going to be going over 3 trade breakdowns for you. The first one here being this liquidity being taken towards the outer edges of $30,000. But I thought I want to run through a bit of context with you first before I just dive into the actual execution side of things. So if we're just heading over to trading, so you can all see my trading view chart. There's a few things to note. First of all, at this point, Bitcoin had been going sideways for a while. You obviously had these 2 major liquidity levels to be really monitoring. Okay, and in terms of the context side of things, you're probably wondering to yourself, well, why is this, I'd generally be favoring towards the upper echelons of these 2 being taken rather than shorting prematurely. But there are a lot of cases where you can sometimes witness an internal liquidity being taken, which is still significant for a drop, and so on and so forth, rather than always targeting these kind of series of highs and lows to be taken. Although these are still my favorite ones to be taken when, imagine we get this and then it gets a bigger move. Now, how could I have preempted this almost? So the first things to note is that there was actually a harmonic. I do trade harmonics. There's only 2 harmonics I actually do look at. I'll do a separate video on this, but the only one I really look at is this Gartley one, which is X to A here, to golden pocket, and then generally it does come into the 786. This was actually really deep. But I was just monitoring for the fact that this can, for the harmonics. I trade harmonics a bit differently to generics, so the fact that all I need to know was it's going to put in a lower high. It wasn't going to take out this overall high because the harmonic would look something along these lines before then seeing, the retrace down. It would just, invalidation would be taking out the overall high. But internally, you need to be looking at internal swing highs before the overall high is taken. So my thought process is, okay, you've got these 2 highs here. The Gartley harmonic's telling me that the potential we're not going to take this high out, but where's internal liquidity? And I like to look at, the fractals that I'm always bringing up with you lot. And you've got one, you had one here and one here. So if we just hide these 2 here, you essentially had one liquidity here and another one here. And these 2 are, and the way I looked at this at the time was these 2 are fairly close together. Okay, before then you have a decent gap towards the one which is your invalidation. So the idea was to be taking these 2 out before then seeing this reversal. So one kind of tip I'd give to you is always to be looking and monitoring for internal liquidity points before the actual overall high is taken. It's proven to be extremely useful. You've got major swing highs and lows, but then look for internal kind of also quite relevant liquidity points, as this case here where a series of liquidity is still being taken. So rather than marking them both out, I'd always just keep the furthest away. So that's the max point of liquidity being taken. So you can just gather and see why I've chosen this level as my level of interest here that I want to be trading off of. Essentially, well, the way I wanted to plan this was, and I want to talk through exactly how I did it, because essentially what I was saying to myself was I will look, I'm prepared for an SFP of the overall highs here. I'm prepared for the SFPs of these highs here. But if I see some sort of reaction at this high also, I'm also willing to take a trade. I can't just be stuck in one complete mindset. It's always important to have some sort of diversification should something go against you, get a front run, whatever it may be, like in this case. Because what would have happened if this just blindly blasted straight through? Well, I would have taken no short trade. It's based upon the reaction that I'm always trading. I'm basically taking my trades off. So let's dive into the exo chart side of things here and talk you through exactly why and when I executed this. So I've just come onto ExoChart's desktop here, and I've actually put the replay function up, and I've just marked out that liquidity level I was mentioning to you, and deciphered how we came up with it, which was 30,312. Okay, and you can see we're coming into this level. Again, you need to have a level of reference first before you're actually starting to take just random trades at irrelevant levels. So coming up with that level is really important. So we just hit the play button here. You can see we'll just slow it down a little bit, even more, probably towards 100. Hit the play button, and this is really good if you want to be just training your brain. Go back, do testing on this, retrain your brain to be seeing these movements really quickly. But coming into this level of interest, the first thing, we're not at it yet, but the few things I'm really noticing, which are quite rare, especially on the inverse pair that I always trade, by the way. You can see the liquidations, rect shorts plus long at the bottom right here, rect short plus long. 137,000, this is extremely uncommon in my opinion to be seeing plus 50,000 liquidations, because the idea is that when you see a ton of liquidations, that's ideally when the market will tend to reverse, but obviously you need to have many other signals coming in confluence with that. So if we hit the play button again, you can see there's nothing really telling for me yet to take a short. I'm just very much aware that we're seeing volume definitely increasing, volume spikes coming into it and liquidations coming into it. Hit the play button again. If we haven't hit this level of interest yet, so I'm just waiting and prepared for this. We see a ton of T-size divergences printing here. we haven't really seen anything still significant. Price is still moving up. We did see a ton of liquidations though. Just really running you through this commentary with myself. We hit the play button again, and now we're seeing, okay, now we're seeing a ton of, this is, in my opinion, just a ton of stops being hit. You're seeing a ton of, all this positive delta you can see here instantly. With this decrease in open interest, this is a ton of new, or positions being stopped out. Positions are being completely closed out in this case. And I'm really patient in this case, because what I tend to do is, we're coming into my level of interest. I don't necessarily ever want to really be trying to time the top. It's for me, it seems like a recipe for disaster. And what we see in this case simply was, you saw this previous candle here from which we had the tons of liquidations in. I said to myself, I'm waiting for this value area low, basically where you can see on the right hand side quite a few significant new longs on the right being opening up. Although the candles generally decrease in open interest, I actually have the new longs and new shorts and new longs on, new shorts on the left, new longs on the right opening. And, I'm basically prepared to see, I want to see these new longs who have been opening here being trapped potentially, rather than trying to time the top. So if we hit the play button again, I'm not going to be prematurely shorting or anything yet. I really want to see this value area low lost before having my validation above the high, whilst also deciphering, is this a nice high? It also adds confluence to me that this is the liquidation candle. These liquidation candles where you have like a ton of liquidations within, or these liquidation spikes, can be extremely useful in terms of deciphering, okay, if we lose this candle now, okay, now we can see a further rotation back towards the downside. So if I hit the play button here, I'm still not short at this point. I'm still not even short. And it only really, it's almost here. I have like conditional orders set on the books, where essentially as soon as we lost this region here, I entered into a market short. Well, it's like a limit short, which start tracing it. I'll go into the functions as to how you can actually really optimize your trading system later down the line in another video. But I got into a short trade here, invalidation being above this high here. And the overall idea was, okay, we've seen all these people liquidated. We've seen this volume spike into this level of interest. And you've actually seen even further, my idea was, okay, we've wicked into this as well now. You have almost a double top here in terms of the candles. But in my opinion, this is still liquidity being taken, people being stopped out. And I'm very happy to take a short here, because after we've seen the sign of weakness, it's very kind of different to the trades I'm going to go over later, because it doesn't really involve a trap value area too much. There's a bit of extended delta, I'll be honest with you. There's a bit of extended delta, which is really interesting, as you can see here, which played into my part. And when I say extended delta, you can see here the final delta candle of this candle here is minus 8.2 million. Even this one here is minus 2.4 million. But look at this, really, really interesting. Look at the discrepancy here, where you can see the candle, the delta max, still had 3.6 million positive within it, but it ended on minus 2.4 million. Next candle again, minus 8.2 million negative finalized delta where it ended on. But within that candle, it still spiked up to 2.4 million positive delta. And the candle's now all the way down here. Necessarily, all these people who are, 3.6 million, 2.4 million, all that positive delta is basically essentially trapped up there. Therefore, that triggered my short trade. I'm still in this short trade now. If we just head back over to trading view, okay, because it was basically this high up here. Obviously, this all played in confluence with this guy named this Gartley harmonic I was mentioning as well, right? Because it didn't take over the overall high. And I was prepared, I said to myself, and I'm always saying this to myself before or after any given trade, I'm saying to myself, okay, let's say I do get stopped out of this trade, because I do get stopped out of trades. Do not think I don't. If I get stopped out of this trade, where am I looking for next? And very simply, these type of internal significant liquidity points, I would just be like, okay, well, if I get stopped out of this trade, it's likely going to be heading to the next swing high, and I can look for an SFP there, or the next series of highs to be taken and look for liquidity there. Anyway, we ended up coming down from here, because like I said, my entry is not amazing on this. I'm looking for simply along these lines, and my first TP was simply coming back down towards these lows. I really wanted to see these lows hit, this low here taken essentially, because we had these like this low here, and it was just about a high low from there. I didn't like that at all. So I was looking for this low to be taken. Also, I had stats in my favor to show essentially that this low would be taken. I took like 60% off. I still remain in quite a bit of this short, to be honest, and I haven't closed it out, and I'll look to really close this short out if we actually start to reclaim this orange line here. If I go back here, it's simply like the range value area low on like the more medium time frame. If we reclaim that, well, then I would say there's a greater possibility that we actually do see these highs tested again, and therefore I would look to close out a further majority of that 40% that's remaining on that short trade. So hopefully that makes sense. Let's move on to the next trade now, because I think that was probably the most complex of them all, because it wasn't a very easy trade, but it had a lot of really good technicalities with it, especially with the internal liquidity, the waiting for the sign of weakness before actually shorting and not trying to preempt the high and anticipate stuff. I'm literally waiting and being patient for reaction and using order flow value area, trap traders, liquidation spikes, volume spikes to determine whether we're going to get a reversal or not. So hopefully that makes sense. Definitely go back and rewatch that. Now let's move on to the next trade, because we're going to be going through 3 within this one video here. This next trade is actually much more common formality for myself, and I think a lot of you would be familiar with this. And it's going to result in a swing failure pattern trade. Again, the last one was technically a swing failure pattern trade, but it wasn't as very much easy because you had different wicks coming into play, especially on my preferred time frame, which is the 15-minute. Anyway, in this case, you obviously saw this big drop to the downside on Bitcoin, sort of big, massive candle. And then you see a ton of sideways action, and this is, I'm taking my measure tool here, dragging it sideways for 4 hours, basically 5 hours of sideways price action. So a very, very common setup, and I'll probably do a thread based upon this for you, which is you have your initial low, you have a lot of time spent after it, okay, and then essentially that's when you then swing failure pattern the low before the move up. Now, what the idea is that we're actually preempting people's stops being hit of this initial low. So you've got this initial low in place. You then spent 5 hours going sideways where people are potentially building up their new longs, etc. below this initial low. Once taken out, then that's when you can then get the initial reversal. And it's very, very simple. If we just head over to Exo charts, you can see here what happened at this initial low. Well, you've got this low here. You don't have a trapped value area, which is really, really important to note. You do not have a trapped value area on this trade, because you can see here the opened up here, wick down, closed up here within the value area. However, all these other things are very, very nice to see, which are, number one, get your checkboxes out. You've got a spike in volume, 66.9 million. When compared to the last 20 candles, that's clearly a spike in volume. And now the other one, which was a bit hidden for me, was, well, not hidden, but maybe hidden to some of you lot, was this delta discrepancy, which ended on minus 13.7 million. And I'm not talking about the positive delta within this. I'm talking about the negative delta. Look at this. So you've got minus 13.7 million negative delta finalized, but it ended up at the peak of it having minus 20.1 million. That's like a $6-7 million dollar discrepancy in terms of in delta. All that delta is potentially trapped down there. When I see this add into my case of taking a trade, as well as, beyond 30,000 plus liquidations leading into this low here. It was simply just, as soon as the candle closed, I'm willing to enter based upon the spike in volume, the SFP of the candle itself, just the candle formation itself. You've got these delta discrepancies in delta max and minimum, whatever it may be in that case, as well as the direct spike in, I classified it on my books as liquidations being hit in that trade as well. So that happened. I then held this trade, and I was looking overall for this high to be taken. Okay, you then front run this high, had a bit of a pullback, and then I moved my take profit from this high, this orange marker that you see at the highs here, down towards this this high here. So once these highs were taken, I was out of like the majority of my trade, and literally again, you then dropped again, still held this trade, still at 15% in it, and then I then closed out the remaining when I then saw this another SFP of this here. So this was a very short-term trade. It ended up booking like a 2.3R, something along those lines, 2.2R, I believe, on this trade as well, which is decent, very, very decent. I can't actually give you a figure on this one here because I haven't actually closed it fully yet, but when I do, I will then do so because I am trying to maximize my R multiple on all these trades. Again, in this case, you could have said I could have held it a lot longer because you had a lot of wicks, SFP of SFP of SFP of SFP that were continued leading up, and then you're seeing all this price action going forward. But hopefully this one so far made sense. It's a very, very short and simplistic one, gone through all the factors in which made me actually take the execution on the trigger, mainly thinking about you having an initial low or initial high, whatever it may be, have an initial low or initial high, spending a lot of time before then testing that initial low or initial high, in this case initial low, before then swing failure patterning, open interest decreasing. And something to mention that I don't usually mention is a lot of people are like, there's no trap traders in this one. It's literally just, you're seeing open interest decrease, not fine. But no, that's the whole part of this game almost, because if you can understand that there's a lot of this is initial low and that you've got a ton of people potentially newly longing, newly shorting, whatever it may be, the likelihood of them placing stops below this level is increased. Therefore, when you do place stops, what do you get? A decrease in open interest when they all get hit. Therefore, this is not a surprise to me and actually still could warrant a very, very, very valuable execution trigger in that case. So hopefully this one made sense, and let's move on to the final trade breakdown now. Coming on to the last trade now is actually a familiar one, kind of similar to one we had in the very beginning, which was internal liquidity being taken before the actual major pivot high, which was the pivot high. And then you've got this swing high here, this swing high here before the initial high here. So looking for these two, which are really close together, to be taken before the actual drop off in price action, which we got. But the actual reaction was really, really, really clever here. I really love this one. So let's get into it into great detail. So you understand the level of interest for myself there. Again, the great thing about these ones is, okay, let's say I'm wrong. Where do I look for the major pivot high there? So again, don't be afraid to enter just because you're going to be wrong. At least know if you're wrong on X reasons, then you know exactly where you're going to re-enter if you are, stopped out or whatever of this trade. Heading over to Exo charts, this level of interest in play. What I should probably do is mark it out. So if we just go to here, around 29,510 is the level of interest. So we'll go here, delete this, 29,510, which is around here. And you do this front run of a candle, which is really, really decent, and this is going to trap a lot of people out because I've got my level of interest, and before even this level, there was nothing really in my eyes to be taken. This kind of candle here, there was nothing that we actually took. I would not trade this unless these two were taken at the minimum or the overall swing high. And then what happened in this candle was you got a trap value area, your T size divergences, you have extended delta, but there was no level of interest. Again, you always have to have that. Hitting the play button, what do you then see? I'm prepared to potentially make an entry should we start dropping below, even these regions here, around losing these volume spiked candles towards the upside. Hit the play button. What do? We actually see price, so let's just pause it. I'll show you what happens because positive open interest, negative delta, new short start opening. People are thinking, okay, we're going to get a reversal now, but we haven't taken any liquidity to the downside to stop anyone out majorly, in my opinion. What do you then see? You then see, this continues on, pause, okay? Because this candle is now closed, and you can see there's a ton of new shorts trying to drive price down. You can see on the left-hand side here, 500K, 600K, 100, 700K here, all trying to drive price down. Open interest and negative deltas showing that as well. That is telling me there's a lot of new shorts opening where they're going to be placing their stops above this high here, which is just a coincidence because then if we are to take this high, it's likely to then take the next high after it, these highs that I've marked out before that I was showing you, to then give us a larger pullback, So basically preempt people to shorting early before the actual internal liquidity is to be taken. So then what you then see is, play, see it go sideways for a bit again, and I'm reading this all live in the time. You then see an SFP, boom. This is it now because you've seen that stop off, that the open interest drop off. You then seen that liquidity level actually taken now on the chart, okay, and you're prepared for this now because all these new shorts here, new shorts, open interest increasing, negative delta, simplify the information, they're stopped out. I'm making that assumption that these lot are now stopped out. What does that mean? And we've taken our level of interest. Well, what am I then looking for? I'm then waiting actually for these, these levels here really to be lost. I'm not just going to be shorting blind. Again, lately I've been placing a sign of caution upon shorting very, very aggressively. I do like to wait a little bit and at least see, okay, the last trap value area, the last candle's value area to be lost or whatever it may be. So then trigger an execution. So hit the play button and you will get a very quick drop off in this case. And then what you then see in this case, and you can see this, look at this. So you see a ton of new longs opening on this candle here. A ton of new longs after. So you got a ton of new shorts before, a ton of new longs after. And then you then see this drop off in, then you then start to see a larger drop. And as soon as this, I remember this very small spike happened, we lost around, these kind of high, this value area here. That is when I then triggered my short trade with my validation simply being above the high here. I still, why am I looking for a short as well is kind of a question I'd like to answer because I have my statistics. Again, these statistics give me a larger edge on the market. And I knew basically on that day, there's a good probability we're going to come down and at least test this like order block zone here. Okay, at least test it on that given day. So to be taking the short from around up here, I don't take any take profit on this until it basically touches this order block region here. And that's what the power of statistics. It makes my final R so much more bigger than if I didn't have that stat or the edge on my side. So again, I entered as soon as that candle basically, we saw that candle spike towards the downside here. Invalidation being above the high. If I'm wrong, again, where am I re-entering if I'm wrong? Not only where am I wrong on the idea, but where am I re-entering if my stop gets hit? If my stop gets hit, I'm simply looking for the next swing high to be taken, okay? And it didn't get taken. I took up 70% of the profits here upon this being hit. And now simply, I'm still remaining in that 30% and I'm not closing it until, again, it's major swing high now, internal liquidity. Whoops. This is now your internal level. If we reclaim this high here, and able to hold it, that is then when I'll look to close out the remaining 30% of this short trade. But for the moment, I still feel we're going to be heading lower, targeting towards these lows here on the chart, even back towards this low again. and I'll still remain in those that short trade, so, or two short trades. So hopefully this all made sense to you. Hopefully you gathered and found a lot of this valuable. Again, I'm putting out a ton of threads on Twitter now, or on X, if you want to call it that, in relation to certain setups, etc. And I'm hoping you're finding those valuable. Again, check out the website luxury.trade for any further information on myself, and I'll catch you all later.